Welcome back, and joining me with her take on the day's markets action is Faheema Adia from Momentum Securities. Thank you so much for your time, Faheema. What I'm mostly surprised by today is the strength that we are seeing in the rand, and it seems to be going and going and going now below 17 rand 30 against the US dollar after touching over 17.70 yesterday. And I'm wondering if this is just a sign of the US election dust settling.
Afternoon, Zanasi. Thanks for having me. Yes, so we are seeing that rand is a bit stronger after the significant weakness we saw in the lead up to Trump winning the election. So I think basically what was driving that weakness was just the strength in the dollar, just on the back of yields going up in the US. And also investors just fleeing to the safety of the dollar amidst, the uncertainties that the Trump win will potentially have for geopolitics going forward in terms of things like trade wars and whatnot. So obviously, given that South Africa is seen as a more high-risk emerging market, that did take a bit of a toll on the rand. But I think, like you said, yes, as the dust has started to settle, we're likely starting to see some recovery here.
All right. Well, let's talk about the company news that came out on the JSE today. It was quite interesting for me to see SAPI after they released their fourth quarter year-end results. I mean, looking at it from an FY24, FY23 point of view, things seem quite bad. But then obviously they talk about a strong fourth quarter there that was the outperformer. And we did see that share price jumping 11%. What was the most encouraging thing about these numbers?
Yeah, so the market responded pretty well to the numbers. So if we look at it for the year in September 24, it did beat consensus expectations. If we look at the pulp segment in particular, it's doing very well, leading to record profitability in South Africa. On a more negative side, though, the paper market did see slower recovery. So if we look at the sales volume there, that was about 5% weaker. And then there were also some once-off restructuring charges that had an impact on the earnings, and also some higher finance costs due to the increased levels of debt, which did take a bit of a toll on the profits. But I think the outlook generally looks quite favorable in terms of that pulp segment, and they are expecting that to continue to show strong growth in the next year.
All right. Well, let's go into retail. Truworths, they're coming out with its 18-week business update, saying group retail sales only increased by 2.8%. We did see Truworths Africa there being the underperformer, seeming that the result is carried by the Office UK. The stock nosedived almost 7% the last time I looked at it. What does the investors see there?
Yeah, so it's been quite a tough trading environment for retailers in South Africa. There has been some positive sentiment, I would say, post the GNU, but we do need to see some real concrete results from this in the form, of course, of economic growth and a consumer that is under less pressure. We've actually only seen the start of the rate cuts, so it's going to take more time before it actually filters through to the consumer and results in an improvement in their disposable income. But if we look at the office side of the business in the UK, that actually seemed to be up quite nicely. The sales were up about 10% there, so that did offset some of the weakness that we saw in South Africa and in Africa. But some of the biggest risks that they mentioned facing the business in South Africa at the moment is obviously the entry of those online Chinese fashion retailers such as Shein and Temu, which is obviously taking quite a lot of market share from the South African businesses, and is definitely a reason for concern.
Faheema, before we excuse me, before we get to your stock pick, I want to check on Grindrod because they gave us a voluntary update. Talking about the closure of the Libombo border and its impact. What is this update about?
Yeah, so basically the market wasn't very happy with this voluntary update. The stock was down about 4% on the back of that. And they basically just said that they've had to temporarily suspend those operations in Maputo and Bitola. And that's due to the outbreak of post-election violence in Mozambique. South Africa has also had to temporarily close the main border with Mozambique due to the safety concerns there. And unfortunately, this disruption is likely to have a significant impact on Grindrod, given that the operations, they are quite crucial for the handling of cargo So I do think it's something that could have a more broader impact on the overall financial results for the company.
All right. Well, let us get to your stock pick for today. Faheema, what are you choosing?
So I'm choosing Jefferies Financial Group. It is a US mid-cap stock. It is one that I've recommended earlier in the year. If we look at the performance, it's been quite tremendous, up almost 77% year to date. But I think that there's probably still room for further upside on this one, especially considering the Trump win. So Trump will focus on deregulation, and that will have a positive impact on banks such as Jefferies. If we look at the business case for Jefferies, it has a strong investment banking pipeline, well positioned to also benefit from the rate cutting cycle in the US. If we look at the asset management revenue, that's increased almost sixfold, and we are expecting to see the bank gain further revenue from increased M&A activity. So that's my stock pick.
All right. Well, thank you so much for your time and for analysis on what has moved investors' money today, Faheema. That was Faheema Adia from Momentum Securities.